Hello everyone, welcome back to another video. In today's video we're going to discuss some concepts of footprint, in which we're going to talk about the max min delta, the COT high low or the delta, and also mix these concepts with the concepts of volume profile and market profile so as to position ourselves on the right side of the market. What do I mean by that? For example, we're going to talk about when there is a trend in one direction and then suddenly the market reverses, or I mean, there's a fierce reversal, and these days it's happening quite a lot. And what happens is we generally get positioned on the wrong side. What that does is we start finding trades towards the long side, thinking that there is a trend going on in one direction, but the pullbacks are fierce and we get stopped out quite often. So we'll just look at our the footprint charts and mix them with volume profile and market profile, so that we're not positioned on the wrong side. So we have a context that is, from the higher time frame, moving on to the smaller time frame concept, so that even when we are scalping, we are aware of what the market is trying to do, and thereby taking positions or forming a bias which can help us taking the right trading decisions in live markets. So let's start with the with what happened on Friday. Okay, so the market was, consolidating, or it was obviously trending right from the go when we saw this. So if you've seen my previous video regarding market, max delta and min delta, you will have noticed that if there is a short that we would have liked to take right at the open is when we see this high max delta, rather this one break down. What that is, that when this breaks down, we're looking at this position wherein if we come here and we see some weakness, there is a short that comes in. So this is a concept that I've discussed in my previous video. You can go and watch that. So the first 5 minutes we neglect, and the second one where we see huge delta and max and min delta and delta is this one. So this is a place where we get interested, and when it breaks, you could have gone for a small scalp when this breaks and it goes down, and of course we are expecting the target of this. It doesn't, and it moves on in the other direction. So it would have taken your stop losses or given you a bare minimum of 1:1. But this early in the day, as I've discussed in my video, it is always better to hold on and see, because this is just the end of first 15 minutes and we would like to wait and watch. Secondly, why this trade wasn't on at this point was, let's go into this. So a lot of people think that when you get into scalping, you don't need to know what has happened in the previous few days, or the context is not important. You will be really you'll really find yourself in the wrong when you start doing that, because you should have an idea of what the market in the overall is trying to do. So when you have some rules or strategies that we keep discussing, for example the max and min delta, and this is it is this early in the day, it is always good to have a perspective wherein you know that the market is trying to do something which is not in consonance with what I am seeing here on the chart as of now. Okay, so of course we were expecting this to be tested, and there was a bounce that could have taken place from here. So our targets are nothing below this, because we can see bias is what we can see straight away from the first 4-5 minute bars in the footprint. But when we go to the market profile, there's something very interesting that was happening at that point. So to look for a short is something I wouldn't have done at that point. Why? Because the basic market profile rule, I'll just start marking it, is that this was a spike during the end of the session. Just a minute, I'll change the color. So this was a spike. Okay, I hope you guys know what is spike. It is just nothing but something that starts happening from the L period, the last 3 periods, KLM. You can sometimes include J also. So it is something that happens during the last 1.5 hours after 1400 or 1430. Now a lot of times you will see a big move to one side after 230 or 2. Now if that move is actually of some significance, or there are some participants that want the market to move down, this spike should have held. So what do I mean by that? I mean by that is that this spike, if it was to be a bearish context, firstly the market shouldn't have opened here and just test and go. So this is the first rule of spike, that if it has opened outside the spike towards the other direction, the chances are really high that it is going to test this part. And so we have to make sure that we are not on the wrong side of the market at this point. So this is something which is very common in market profile. And I'll just, if you are not able to see it like this in the profile, there's a very simple way of doing it. I'll just split this profile so that we are able to see this properly. So you can see this is in the K and L period, you see there's a spike to the downside, and a lot of people would start thinking that this is the start of a downtrend. It is too early. Now we can even go and dissect the markets further. What do I mean by that? So if you see over here, the market was in balance for the past few sessions. So there was one session which balance area which was something like this. Okay, the other one, it tried to go up 2 times, failed, and then generally we say the destination trade becomes something on the other side, other end, which was, if you see, this was a small balance area that was forming. So this has been going on for a lot of days. So it gives a move and we think it is going to move, go in one direction, it fails and it comes back. Now what has happened recently is that it did break out of balance over here. Okay, and it broke out of this balance and it has formed a sort of a new balance area, which we can say is something like this. Okay, and if you keep dissecting this, you will get to know very interesting stuff. Now if we go further and split this one, and what we see is there was an attempt to break out of this balance zone over here. That is the high of 8 June was the market tried to auction above it and failed, and again the destination trade becomes the other end, and it reaches the other end. Now at this point we don't say that the market is short, because it's not actually gone down below this balance zone. So there are very high probability, when this is going on, that what the market actually does is the next day it breaks and comes here, and you start thinking it is going to go down. It just tests the previous balance area POC over here, and then resumes and comes back within this balance area and then tests this again. This is one concept, or this is one scenario that we're discussing. But what happens is straight away it gives us a very, very good signal, wherein what happens is, I'll just unsplit this profile, and it tests the, like we just spoke, it doesn't even test the it tests the spike zone, and it doesn't even enter inside. So it's a very big clue that our this is not even tested. Tested, but it doesn't enter inside. It gives us a very big clue that the destination area is this, at least for this area. So what when this was happening is, what we were expecting is that the market to balance somewhere within this zone and stay throughout the day, and maybe the next day open gap up, or do something like this and move away. But what happens is somewhere in the I'll just expand this, and somewhere in the J period it does break out, okay, and moves to the other direction. So why I was getting into this market profile is to let you know that at this point it was not a wise decision to go short, because we have seen something exactly opposite of what should have happened. If the market was to go short, it should have, firstly, straight away after opening, it should have tested this area at least, and then we could see, and then the area of 681 was in play if we were going down, and we could have found a short over there, even if it was a scalp. So even if you're scalping, you need to have some context in mind. Anyway, let's now this is something I just wanted to tell about why even if you're scalping, it becomes important to have some context in play. Now what we will do now is directly go into when the market breaks out at, I think the J period is somewhere here. Now even if you're looking at footprint and you're not looking at market profile, straight away you start seeing activity like this. Okay, this is a breakout. If we cool down and contract, so this is the first bar where we see 913 over here. Okay, so this one is the first bar, and we see it is not even broken. It has broken the high of the day, and formed a good max delta over here, which is much higher than what has happened in the previous few candles. In fact, I think it was higher than almost second or third highest bar since the open. So we are like we have discussed in the video, if we are going to expect a mean reversion, and like we just spoke about here, if we are going to test this and come back, what we want to see on the chart is that this area should, after this candle happens, it should come back, and then we look for something, I mean a touch to the VWAP or move to the other side. But what happens is the next bar, it moves straight away up. So if you go to the 1 minute candle, which we will, we can look for longs, because our theory of wherein we want to find a short trade is failed, and there is going to be a move to the other side, and a lot of people are going to get trapped. Why? Because it has just broken out of the balance zone of the first I mean for a few days, which has been holding up for a few days. So this is one place where a lot of guys going to be trapped, and we're going to get a good move to one side. Now this is not what we're going to discuss further in this video. What I am going to tell you is what happened yesterday is I'll just show you. This happened, so I'll just contract it. Now it went from here, it went a good 100 points and it pulled back another 60-70 points. So it has come back almost 3/4 of the area. Now what we generally do is, when we see something like this, what we are expecting is, on a 5-minute bar is people see this big bar, another big bar, and they're expecting something like this part to hold and go further. So it's quite common, and it is generally expected if the trend is to continue. So which are the big bars that you're expecting something like that to happen? Are one is this one is this one, then, and you keep seeing these bars. But what happens is, this pullback, you're expecting somewhere a the pullback to be here, and the move to continue, or at least mean revert in this area. But what happens is, it pulls back and keeps going down. Now we're going to dissect what was actually going on over here, and whether our focus in this video is to not be on the right side, so on the wrong side rather, and change our bias immediately when we see something is not going as it should have, by the way of seeing the amount of good delta bars that were coming in play at that point. So if we expand this bar now over here, and we keep marking the areas that we just spoke about, the places where you see high delta, and you keep marking those places. I'm going to tell another way of doing it that you can do. This is one. Okay, so this is one area, then this is another bar where we see good amount of buy delta come. Obviously there were a lot of stops in place, so these I will just keep marking these zones, so that this is one zone, and you might feel these are quite a good number of zones that are drawn, but they are tremendously helpful when you start scalping. Okay, and then you see another one here. Okay, so the first this one, now we won't draw any further, because obviously there was these are the ones where there were high delta, positive delta bars, and after that whatever happens we'll just discuss. So now if you go back and see, so the big bars as I was speaking, so you were expecting, or anybody who's following price action, even price action depicts a lot if you study it carefully. He was expecting, even in the footprint, what I was expecting is a bounce of this place and to move forward. But what actually happens is, we start seeing negative delta, max delta, and this breaks with so much ease. I mean, this was the first signal that you could have got, that it should not have broken with so much ease, because remember, there are a lot of shorts that are trapped. So when there's a pullback that is happening in the markets, what actually is happening is, the shorts that are trapped, they're getting out with whatever they get at break even or a smaller loss, whatever, and they come out, and the market finds another rally. Even if it is not rallying, what we generally see is, after a big trend like this, is something like this and then a fall. But what actually happened is that the market just immediately went down. Now I'm going to shift to a 1 minute chart and show you exactly what was happening, and find good places where we could have shifted our bias. So on a 1 minute chart, you even find better opportunities if you're scalping. So this is the bar that we spoke about, these two bars, and we have marked the zones. Now when the first hint comes when this breaks, obviously we are expecting a bounce of this place, and it tries to go up again, and you see something over here that the buyers do step in again to push the market up, and they fail, and they fall back immediately to this level, and our indications start coming at these levels. When you see they're not holding, they're just immediately bouncing from here. What we were expecting is a bar, something like this, wherein there is a small amount of delta, but it is absorbed, and the market is trying to find some sort of consolidation here and move up. This is something I've discussed in the previous video, so you can go and watch over there. Now what happens, it immediately breaks. Now the other tool that I was talking about, which can really help you, I mean, shift your biases, we'll go to the place where we saw some good buyer step in is from this place onwards. Okay, from 1405, let's go ahead. Yeah, this is the place. So this is the bar where we see some good amount of buyer step in. We'll just right click over here, and we'd add an anchored VWAP. Why we're doing it is because we see a good amount of volumes pump in that have actually driven the market and taken the market to the upside. So there you go. This is your it's absolutely coinciding with the zones that we have drawn. So these were the last zones where we see good amount of positive delta. So this should have held. It breaks, and it is coinciding, or there's a confluence of the anchored VWAP. So if you are, I mean, thinking of a long, this is the place where you absolutely get out, and you can even initiate a short trade. Why? Because a lot of longs that have come up here, all these levels are now trapped. These shorts that are here, look at the numbers over here, they're all trapped, and they're going to get really hammered, and they're going to come out, and the obvious targets become for you is these squares or rectangles that you have marked, and you can take quick scalps with really small stop losses just above this one if you're entering somewhere here, and again it keeps going down. Now this is how you can find good really good high probability scalps. Now if I take out everything, and if you ask me what is the plan now for let's take out everything, the drawings that we have drawn over here, and what is the plan for Monday, and if I want if I would be inclined towards taking a long or a short. So again, we'll just go to the market profile, and the first thing I do not want to see is the market come back and break this J. These single prints are broken and comes inside. So if, for example, we're not sure what happens, but if, for example, there is a let's get this done. Okay, so if, for example, the market opens here, so you can see the same thing. This is a spike K, L and M. So the same thing that happened here on the downside is happening on the upside. So if the market opens somewhere here, so the first thing that has happened is that the spike rules now again are in play. So if we open here and we start breaking down below, we are not looking for a long over there, because what happened here, the exact opposite is happening here. So what we don't want to do is, we don't want to scalp for a long here. We want to look for a short unless we come back in this zone, of course, which I mean gives us the confidence that this area is going to be tested on Monday. But if it's opening here and it's breaking in the first 10 minutes down, so what we can expect is a test of this and then the other end. The other bigger time frame thing that comes into play is that as we just we just drew a balance area. So if it comes back, this is a beautiful concept of market profile, look above and fail. So the other end of the balance area comes to zone, so that is the first target becomes 770 or something like that, then this one, and so on, and 680. But for that this is the zone that I don't think will break immediately, or I don't think will break. We'll see what happens. But if this breaks, this certainly can come into play, and we shuffle around for a few more days into this, in this balance zone, and then eventually if we have to break up or down, we see from there. Now one more thing that I want to discuss is something similar that happened on the previous day. Let's move on and see on 15th. So this is something similar that happens in the sense that you shouldn't have been positioned on the wrong side. Is it again breaks out to the upside if you see on the 15th, and the same things you have to do. So you have to look for places where you saw aggressive buyers or sellers step in. So this is one place that we see aggressive buyers or sellers step in, and it happened at about 9:45, and when the market opened, there was an aggressive sell push. A lot of imbalances were formed, and when this trade is taken out, obviously it's quite evident that the high is going to be taken out, and we went in one direction to the other side. So all these short people who went short here got trapped. Now when it is going to the long side, again you're not expecting, or you're taking pullbacks, and the place where you do not want to get stuck is, again, we'll just add the simple tool, is this one. So you can draw the same rectangles and the zones that I just marked, and they will always match with this anchored VWAP. If you do not have the time and you want to keep it really simple, so this is a really great tool. Now what we see here is, again, as soon as the anchored VWAP breaks from the place where we got a good from the place where the move started, it breaks, it is going down, and the targets, of course, when you draw those zones, you can keep them as targets, and the market eventually breaks down and tests the low, and something like this happened. And on the next day, as you see, when all this was happening, so these were the zones where we had the imbalance zone. The market just opens above that, okay. So and the market just opens above, above this, all this zone that there were shorts. So even if you look at the price action, you see it's not that convincing, and as soon as it opens, like we saw in the market profile, it just pops up and leaves a lot of shorts getting trapped, and of course then this happens on the next day. So hopefully you this video was helpful to you. The platform that I'm using here is GoCharting. Until next time, bye bye.